Hello, everyone. Welcome back for Financially Fit Friday. I know we've taken a few weeks off here. Schedule's really busy in December, so we apologize for any delay in our presentations or our Facebook Live feeds as we're going forward. But since it is holiday season and there's been record numbers of Amazon sales and online shopping and Cyber Monday and Black Friday, which is a good year and good thing for the economy that people are spending money. But with that comes credit card debt. When people are shopping online, you can't pay cash for.
No.
So some people get into credit card debt throughout the holiday season. And we're just going to touch on a few things in regards to credit cards, just so people have a little better understanding, or they can reach out to us for further explanation on something that we touch on. In the next 10 minutes or so. So with that, I'm going to turn it over to Tanya real quick here to lead us off in our credit card discussion.
All right. Happy holidays, everyone. It's nice to be back. One of the first things, I've been doing a lot of stuff on LinkedIn and asking people, I'm setting up seminars and asking people, what is your one question that you would be interested in? And almost invariably, it does have to do with how to handle debt, how to use the credit cards in the right way. So we wanted to talk a little bit about different types of credit cards. We both actually want to start with the fact that there's obviously credit cards and there's debit cards. We both agree that you really should, if you use the credit card correctly, you pay it off at the end of each month. Having said that, if you use it in the correct way, it is a much better option than a debit card, simply because of the protections it affords because there is so much online. When we're doing so much online, that someone can get a hold of the numbers on your credit card or on your debit card. With the credit card, you can call the credit card company. With a debit card, the money's already been taken out of your account, and then you have to go through the bank, and there's a lot more paperwork involved. Having said that, not all of us can pay it off on a monthly basis, and and credit is based on the fact that you're using money that you're borrowing from someone today to pay back tomorrow, rather than using what you have that you've already made. So having said that, we have a few tips as far as credit card goes. You want to start off with one?
Yeah, I mean, one of the first things I would say too on the whole credit card, debit card front is the convenience for you using them makes things, easier for people. However, the merchant does pay a fee for every time you use a credit card. And sometimes you will see vendors or merchants you got to spend $10 because it's costing them money every time for your convenience.
Right.
A debit card comes out of your bank within the next day or so, and some banks charge you that fee for using a debit card, depending on what bank you're working with and those types of things. But a lot of time your debit cards are connected to a MasterCard or Visa, which is tracking your credit score and everything else like that.
Right.
Now I just totally lost my train of thought of where I was going, but I just wanted to throw that in.
No, it's a really good thing to know, because sometimes you don't realize what exactly the kind of financial fees that you're paying, and whether you're paying it or the business is paying it. It's good to kind of track that and make sure you understand.
And a lot of businesses do add that in their costs when they price out their products of what percentage am I doing in credit card sales. Then I got to pass that little cost back on to the customer going forward.
So one of the first things that you really do want to take a look at is if you are using that credit card, which we don't recommend, but as an emergency thing, for instance, something goes wrong with your refrigerator, you need a refrigerator, or you need a new washer or dryer, you want to check what your financial the interest rate is. We did a little research to make sure we were updated, and the average interest rate is 17.2%. Now, maybe to a lot of people that doesn't sound like a whole lot of money, but it adds up very quickly, especially if you're paying, for instance, the minimum amount. So I have an example. We all have TVs, and if you can buy a pretty decent TV, so for let's say $700, so you buy the TV, you put it on your credit card, you pay the minimum amount. With all the other expenses you have on your credit card, you're probably paying $10 into that TV. it will take you 10 years to pay it off if you are doing the minimum amount, and it will have cost you, that $700 TV will have cost you 14,000 plus.
1,400?
So, did I say that?
Yeah,
Not
14,000. Woo!
1,400.
Better be
Thank
a
you.
nice
Glad
TV.
he's listening to me. All right, so yeah, really nice. But $1,400. So what you've done is you've paid twice the amount, 2 times the amount. Meanwhile, 10 years, my guess is you've already gotten rid of that TV and bought another one. So here you are, you're probably on your second or even third TV, and you're paying for 2, possibly 3 TVs, even though you don't even own them anymore. This is where 17.2% becomes a real rough thing for most people, and why it's very hard to ever get out of credit card debt. So one of the first things that we recommend is that you pay more than the minimum. The minimum amount is great for the company that owns the credit card. It is not great for you.
And for a perfect example is when you do 0% interest, they'll send you, say you bought that TV for $700, you did 6 months interest free. They'll send you your minimum payment, which might be $15.
That's
If
right.
you just pay your minimum payment, you're not paying that TV off in that promotional period, and then you're up to that 7 or 17% for the remainder balance of that TV. And people don't realize, and it tells you on your statement, but credit cards charge you a daily interest rate. So if your percentage rate is 17%, divide that out by 365 days, and that's how much they're charging you per day. It's a little number, but it adds up quickly when you have a rolling balance that you have to pay for.
So our first tip is to pay more than the minimum amount. Okay. Well, our first tip is pay it off
Every month.
On a month. Meaning that if you really don't need, if you can't afford it, don't buy it. Save up for it if it's something you really want. All right. And then the second tip is if you do have a balance on it, pay more than the minimum amount, because that is a benefit to you.
Yeah, you're paying down the principal, which is the rolling interest rate on a monthly basis. So you're actually saving the interest when you're paying more on the principal on a monthly basis rather than mostly all interest.
There's another thing that's very interesting. A lot of us will forget, although if you use online payments, you should be in good shape. But a lot of us will forget every once in a while to make a payment. And I fully admit, I've done it before. Those credit cards then, that 17.2%, may that following month end up being 25%. And you don't know that, but suddenly you are paying a heck of a lot more. So be very careful. Always pay monthly. Pay at least the minimum amount, okay? Pay more than the minimum amount. And then watch out for, what was I going to say? Oh, and then if you feel like you're having trouble with it, take a look and see if you can find some way to drop the interest rate. Give the credit card company a call. If you haven't missed in a long time, call them and ask them. Say, hey, look, I've been a really good client. I'm thinking of, moving my account because I don't know about you guys, but I get it in the mail and in email. I can get a zero balance for someplace else. Ask them if they can drop that interest rate down a bit.
On transfers, just be careful. Sometimes it does cost you money to transfer the balance. Also, sometimes if you transfer, you can't use that card for a certain amount of time unless you have so many payments go in.
Right.
But 0% interest, if you can get a 6-month and transfer a balance, or it definitely will save you money, and you're pounded down on the actual principal of that.
Yeah, because with the 0%, of course, you don't have any of the interest. So you can put, and I've had a number of clients do that. We've found a zero interest for them. They've put a certain amount, which they know that in the 18 months that they get that 0%, they know that they can get, they can make that payment every month. They do, and it's amazing how much credit card debt you can decrease if you do something like that.
And over 18 months of paying off that principal is certainly going to help your credit score too. And the thing is too, when you do transfer, you don't want to keep piling on that 0%, because at the end of that 0% period, you're probably higher than the national average of 17%. You're probably at the 28, 30% for that 0% transfer.
Yeah.
That's how they make money.
Right.
So they want you to spend. Just a few things in closing here, because we only have a few minutes left. Credit cards aren't all bad. I mean, one of the things that they do if you use credit card is they track your expenses. So when you do your monthly budget report or annually, you should be doing your budget or reviewing your budget, is it gives you an itemization of where you've spent your money throughout the year to kind of clarify where those expenses are coming from.
Yep.
I know with one of my credit cards, they send me an annual report that I can pull down, and it separates into categories where you spent your money. And I mean, most people I think are like me, that we probably spend most of our money on food.
Yes.
Unfortunately, we still have to eat, but there's probably better ways to spend our money than on food. The other thing too is, and I'll touch base on this real quick, is depending on the credit card, the points that they're giving you can be used to buy other things. I know on a monthly basis here, we use American Express to pay for a toner and different things that the company uses, but it's nice to have $30, $40 applied to that next purchase by using some of those points on things that I'm going to have to buy anyways.
I completely agree. If you're looking for any sort of credit cards, take a look at what it is you do. So, somebody just mentioned that they shop on Amazon all the time. So they're going to get the Amazon credit card because that will add up. And it will. For me, I have a different credit card, and I put everything on my credit card. I pay it off on a monthly basis, but I put everything on the credit card. So I have enough points I have 3 teenagers. I have enough points to buy them almost everything they want for Christmas off my points from the previous year. That's a nice bonus.
And also make sure, speaking of points and credit cards, that you should link your credit cards to your saving for college.
The You Sense.
You Promise. You Promise, that's what it is. Connect your credit cards to You Promise and get some points for your children's education as well. Every time you use, whether you fill up at the gas station and go to the grocery store, you can earn points towards your children's education by linking those credit cards to youpromise.com. I guess that's a plug for You Promise, but it's definitely something.
Good thing, right? It's helpful.
Give the kids an extra couple of bucks for a cup of coffee at college, right?
That's right.
So, anything in closing?
No, I think we covered it all.
If
you guys have any questions, please contact us. We'd be happy to help.
And just if you weren't aware, Buffalo First is holding monthly presentations at our office. Watch out in your email for those. This past week we did tax preparation for next year. And in January we're doing estate planning. So make sure you check out our website, our Facebook page for all that information. Thank you, and we will talk to you soon. Happy holidays.
Happy holidays.